Good morning, Michael. Good morning. Okay. I'm working on a scan this morning that I think is going to be very helpful. But in the meantime, let's catch up with the market here. All right. The market is relatively unchanged between yesterday and today. Let me take a look at what the economic events are this week because yesterday I didn't check. It's always a good idea to know what's happening this week economically. Okay, we've got PMI this morning at 10 o'clock and JOLTS job openings at 10 o'clock. So at 10 o'clock, we're going to see the market shift. Wednesday, nothing important. Thursday, PMI at 10. Friday, NFP, non-farm payrolls in the morning and unemployment. And J-Pow is going to speak somewhere at 11:30 a.m. So Friday is the big day. So everything from now until Friday is a little bit non-consequential. With the brunt of it, I don't have to stream to Twitter because that's not live. Are you sure you want to stop? Yeah. With the brunt of it coming on Friday morning, and during the day when J-Pow starts speaking. All right. Right now, with the market having so much uncertainty around it, however, I do see a VIX divergence, a bullish VIX divergence. So this recent bottom is bullshit. It's has not been corresponding to the levels of fear in the market. It's been exaggerated. We should be up here around 495. So we're at a huge discount right now in the market. 460 divided by 500 essentially. We're at about an 8% discount as to what reality is on the market. And so there's a lot of opportunity here. And there's a ton of interesting stocks to look at. Look at this one, O'Reilly. I mean, phew, it is just flying. Is that on my list? Yeah, I put a star next to it. This is our number one. But we're going to need to wait for a pullback or some kind of setup on that one, O'Reilly. Wow. This one, HES, although it's a little bit, I believe it's energy related. Let me see. Integrate oil company. But it's in a good place too in terms of relative strength. It's not a beautiful chart right now and just flying, but relative strength wise, it's really teeing up. I got into 15 names yesterday on put credit spreads. That's the way to go, really, in this little bit of uncertain moment in the market. So I'm laying out my bets using put credit spreads. That's the technique that you really want to have down for times like these. I mean, I could probably put credit spread for the next 6 months if I needed to. I'm only put credit spreading anything that's a chart that's reliably just going up and up and up and up. Just think of O'Reilly here as a good model of that. Just imagine, wow, they were $169. Well, that was eight years ago, but no, they've done quite well. They're now almost 10 to 10x that. But those are the kinds of charts we're looking for, and I've pulled up a lot of them. BSX is something I got in yesterday. Yeah, you can see that's quite nice. Pulled back 13%. Anything that pulled back less than 25% during this last correction and is still at their, is still near the recent highs, it was going up and stuff, that's good stuff. Write that down. So long as something during a market correction hasn't corrected to its low point more than 25%, then it's in decent shape. And if it's still near their highs, like so back here on this one, BSX, beautiful chart that you'd want to be in, didn't correct more than 25%. That one Rocket Lab did correct a lot. Let's see. This one corrected 51%, so it got 2 beaten down. There's probably some opportunity there, but it hasn't held for me, and that's exactly what I'm talking about. And also, it's only newly and freshly bullish, which is fine, but it's just not as time tested as like BSX. See, I mean that's just straight up, and then when the market got hammered, it even just only fell 9% and then 13% at most. So it's held up quite well. It's doing quite well. That's what you're looking for. Stocks like that. And look at AT&T. Like, wow. We're just waiting for that one to turn around. What is the circle again on my list? Oh yeah, I can it can be PCS. I'll put that here. Circle equals PCS. Star equals wow. I would probably put AT&T in that wow category. Let me see. Yeah, I could put AT&T in that category as well. So I'll put a star next to AT&T. There we go. All right, the market is open. Let's see what's going on. All right. We have a little bit of pullback in one of my stocks, TKO, which I alerted if anybody got into that. Oh, it's really nothing. It's just options pricings are going to adjust. This is typical PCS stuff. The options pricings will adjust over the next few minutes here. And to adjust. And the other one is BSX. We were just looking at that. And yeah, it's pulled back from the high. So that's more realistic, but that other one, TKO, is doing just fine. I got into Netflix yesterday. Let's take a look at TKO. It's another good example, I think. Yeah, see, it's another good example of something that's just been flying lately, really nicely moving along. But how much is it corrected off of there? 23%. So it's still good. Still a good selection there. I'm going to change one of my scan lists here. 1 second. It's going to be better. I'm waiting for some calculations to load in here, but I have a decent list setting up here. AIG being one of the strongest. Yeah. Moves in the last 60 days. Nice. What is that? Hess. Fully green this morning? No, that is incorrect. So some of that information there is not correct. Still doing the calculating. And this morning we're about 48% bullish breadth. That was just off the top of my head, and I'm looking here at an actual calculation of it, and it's 49.1%. Yep. Very good estimator after 25 plus years on the stock market. That's interesting. Okay. Upside reversal on RCAT. Let's see if that's true. Sometimes this thing is not. Okay, that's not exactly true. But that is a very interesting spot. A little bit of a cheat entry there on RCAT. Yeah, the only thing is that it's really pulled back. 70% pullback off of the highs. And you want to stay in things that are like, staying bullish. Let's take a look at Costco. Okay, Costco is still making its way along. It also got a bit beat down. It was only 18% though. See, and that's a gorgeous chart. Now, do I have that on our list? I do. Okay, that's a gorgeous chart, and only beat down 18% off of the last correction there. So that's definitely in play, showing a lot of relative strength. And is it a signal today? You could kind of call it a signal today, but I'd take the low of yesterday as the stop. So that's about $30 of risk there. We are now hitting about 60% bullish breadth. And top of the list is Roku. Let's see. No. AFRM. Yeah. ASND. Nope. NRG. I think that got on our list the other day. No, it did not. And yet, let's see. 30% corrected. 30% during the last correction. It's kind of strong. Nice name though, but a little bit too strong of a correction. Right now we're in this sort of bearish pullback on the market, and it makes it the perfect time for you to just filter out what's strong. Anything that's doing well has been doing well. It's in a beautiful move, and then it's been hammered by this market correction as well, but not too bad. Anything that's off of its highs or making new highs, less than 25% of a pullback, really, really good. O'Reilly's like way up there and holding strong. I'm just scanning through things, trying to find really beautiful names up, and now we're at about 30%. So we're really oscillating back and forth. The market now turning a bit red, it looks like. And anything that's showing some strength today that has a nice chart could be good, fair game. And this is exactly why you got to put credit spreads during these uncertain moments on the market. LPLA. EXC. Yeah, see, that's making new highs. Recent move, Exelon Corporation. What was I just checking? Yeah, I wanted to check their earnings. Well, they've been growing. Coming out of the pandemic, they've been growing. They've been doing good. And their margins are 11%. That's a good margin. Last quarter, that fluctuated down to about 8% at one point, but they're back on track again. And their revenues are growing, and so is their bottom line. So they're in good shape. EXC, I wouldn't say that this is one of the better charts, though. But it's interesting. EXC, HCA, Healthcare, took a 31% nosedive recently. So that's not the kind of correction you want to see in any stock. MOH, HCA, ROL. This could be good. See, it has this very long trend that it's been in. However, what has been the correction? Only 12%. Decent. It's got recent strength. Let's take a look. The earnings have been growing annually very smoothly, and their margins of 14-ish% have been holding steady, with variance between 13 and 15. That's fine. And their revenues pretty steady, other than it having some seasonality. So that's looking pretty good. We would want to get, the right kind of entry in that, obviously. There hasn't been any institutional ramp up anywhere, though, however. But I'm going to keep it on the list. ROL. Let's see. And as far as day trading goes, we got, I wasn't looking at that, but GRI. It's a huge spike starting at around 9 and really good follow through. So 920, that would have been an entry pre-market. And then the market opens, and so okay, it's pulling back. So yeah, watch this pull back on GRI. Something could come of it. And that's a 200% gainer. BIAF, there's 3 over 100% gainers right now, actually 4, and we know that that's a very good sign. RSLS for the day trading sort of market. All right, this one is not holding up, and then you've got BIAF. This one's sort of pop and hold. It's too much sagging, not so good. And then ICCT. Oh yeah, this one looks great. iCore Connect, and I would say it's already flown the coop. This was a perfect VCP style breakout at 343, basically 350, and now it's 472. So, well, that was a missed opportunity, but still wonderful. Wonderful to see. And could present further opportunities during pullbacks. I think it's halted. ICCT. So those are the 2 for day trading. ICCT and GRI. The other ones are not going to really happen. I don't like their charts. The float is about $500,000 on each of those, so very low float. So these are really good potentials, GRI and ICCT, for day trading. Oops, I did not mean to put that on the chart. Not even showing it. Oh, it's still calculating. Oh, okay. I can't even read that. It's so tiny. All right, get that off of there. I was just checking if I can get a VIX overlay on there. On the chart. So interestingly enough, this is where you can see what I was talking about, the VIX divergence. So look, the market topped there, came down to here, and then made a lower low right there, right? Okay, so now you look at the VIX. See, how could I type that? Okay. No, it won't let me type it while I'm in this mode. Can I go to keep that up with getting rid of it? Won't let me. Well, anyway, the point is this. Look, lower low between those 2 points, right? Now you go over to VIX, inverted, and you can see we did not make a lower low. That is a revealing sign. That's how I spotted the bottom in the pandemic to within 4 hours. And then that is how I spotted the top of the bull market in 2022 to within the 4 hours. Actually, the first in the pandemic was within, I think, an hour. So you can spot market bottoms and tops by using VIX divergence like that. See, so we did not have a lower low, the VIX, when you use the inverted VIX. We had a higher low, and that's the dead giveaway right there. So it means we're in bullish divergence. And so we can expect the market to rebound quite a bit. It's going to get at least to this previous level, and then perhaps go this way, which is all you need, because that's the market, right? Individual stocks might have much better setups. Here's Palantir with a pullback of 40%. That's a quite deep of a pullback, a bit deep. But let's see. Let's find some better names so I can show you. I was trying to prove a point. But the point here is that while the market is going to then go do this, what I just showed you, which is go test that previous high, you have to remember that from the market chart, and then do this. Remember I drew that? Well, if you notice, this one is in a different at a different point. It's much more bullish. So it's going to do an exaggeration version of that. So it's going to do something like this, and then pull back, and maybe not even pull back, go sideways, and then do this. So when the market's doing what I showed you before, which is coming back up to a particular level, then pulling back and then going, this whole thing right here, retesting this previous level, that's it going up to here on Palantir. See, these names have much higher strength, relative strength. And that's really what we're talking about and getting at with that. Yellow. Need me to look at anything there? Let me know. Let's take a look at Shopify. No. So Netflix is one of those names. What's the correction been here? Only 20% roughly. So that's well above 25%. And so that remains strong, Netflix. But those correction amounts are like rulers, are measuring sticks for which stocks are strong during this pullback. Because the moment the market starts to pick up strength, those strongest stocks, they're going to fly. Those are going to be your absolute super performers. So that's what you got to pay attention to. It's like Home Depot is no good. The correction off of its high doesn't look good, but 21%. I mean, it's not so bad, but it's still not quite running compared to the other stocks. You have these deep pullbacks. It's like it's progressing less than it's pulling back every time. So that's useless. You need, in order for there to be growth that you can swing trade, you need for it to make moves that are bigger than its pullbacks. You know, they say elevator up or escalator up, stairs down. So slow down, fast up. You know, that's what you're looking for. This one here we have slow up, fast down. Like, look at this slope. Slow up, fast down. Fast down right there. So these are signs that you shouldn't trade those. Shouldn't swing trade those. Shouldn't be trading those. I like this one, T-Mobile. T-Mobile, super strong. I mean, off of its highs, hardly anything. Here's this pullback and this pullback. Let's measure them. You got just a 16% pullback back then, but off of the highs, at best 11%, but really the highs here are about right here and more or less right here. So you can think about 5% pullback up here. This is incredible strength from T-Mobile. All the T-Mobile needs is for the market winds to start to blow in its favor, and it will just fly. So this is teeing up super duper and should be considered a very hot opportunity. I'm going to put a star next to it. So that's AT&T, T-Mobile, and O'Reilly Auto Parts with the strongest relative strength and most likely to fly with jubilance when the market winds return. Which, like I told you, it's already happening. The VIX indicates that we are in bullish divergence and that bottom was bullshit. Just like I spotted the pandemic bottom and the bull market top in 22, this is the exact method I used to spot these moments against the inverse VIX. All right, well, there are a lot of opportunities out there, but I'll just be sifting through them throughout the day in order to let you know which ones, and I'll post them into the group. I'm already in 15 names, so I'm in Visa, which looks gorgeous. Costco, making nice progress there. Chewy, Palantir, Discover Card Financial Services, NRG, actually it's Discover, NRG, Boston Scientific is amazing chart, SoFi, it was the strongest in financials, Hood, other than DFS, Hood, great chart, but what is this pullback? It's a bit deep of a pullback, and that's what's keeping it from progressing. 47% pullback. Hood, Glassware, that's Corning, GLW. Glassware is how I think of it. That's probably why it's called GLW. NFLX, beautiful chart, Netflix, SC, beautiful tart. We like tart. Okay, SC, this is another one with great relative strength forming. Only 18% pullback up there, but this is just a gorgeous pattern right here. It's starting to tighten up on the right side, starting to get some control. This one's going to be flying again soon. See, I'm already in it though. HIMS. The premise on HIMS here for me was, if the market's bottomed, perhaps this is bottomed, and if that's the case, then it's got a nice ways to go from 27 to 73, but really the first pit stop is going to be about 38 back to this level right here, this pivot point. And so why not get in here for just maybe potentially this move? That was my idea on that one. 29 to 39, so it's like 30 to 40. And I got it with a put credit spread, so that makes it even easier because I'm just in it for the theta decay and the relative strength. GEV looking pretty good, and the last one I had was TKO. And I am in HWM also. That looks like a very good chart too, by the way. TKO, very nice. But what's the correction here? We just went over this. 23%. So that one's still looking good. HWM. All right, I'm going to do some scan work. Look at this. HWM. Beautiful chart. Incredible. Howmet Aerospace. Incredible. This is going places. All right, guys, I'm going to get to work on this scan a little bit more and be picking stocks all day long. I really want to get allocated. I'm about 37% allocated right now. And if this is an indicated bottom, then, you have to take the gamble that it is based on that premise. And so I want to be fully allocated moving into that in the safest way possible, which is with a PCS. Put credit spreads. All right, you guys. D-Dog? No. Google. Okay. See you tomorrow morning and back in the group as well.